Hi everyone, a very good evening to all of you. Welcome to our session of decoding tax benefits from exemptions to smart investments. So we have a today's speaker, Aishwarya Shanbhag with us. So Aishwarya is a chartered accountant and assistant manager at ClearTax with hands-on experience in Indian and Australian taxation. She has worked extensively on income tax, GST, statutory and internal audits, and tax planning for diverse clients. So at ClearTax, she leads the income tax return filing, the IDR filing, which we all might have struggled with, and she helps clients navigate financial statements with clarity and compliance. So if you are, tired of relying on last minute tax advice from friends or Google, you can just take her help. She will guide you all through it. So yeah, over to you, Aishwarya.
Yeah, thank you. Thank you so much. Thank you for the warm introduction. Good evening to everyone, to all the participants who have joined. Thank you so much for taking out your time and joining this session. So, as you already, got my brief introduction. So yes, this is CA Aishwarya. So I'm a chartered accountant by profession. So I am associated with ClearTax for more than a year now. So I actually lead the income tax return filing for individuals like team here. So I do the return filings for individuals, their notice management, their tax planning. Right. So today's session, as you all might be aware, that as you all might also have got the communication, the videos, and all those things about this session will be all about the financial wellness and the tax savings, right? So I hope my screen is visible and we are good to go with the session, right? Yeah. Okay, fine. Thank you. Thank you. Right. So today's session will be revolving around the financial wellness and the tax savings, right? So we will be talking about what are the exemptions, what are the deductions which you can take a benefit of, and the most common doubt or the taxpayers who are in dilemma about which regime they should select, right? So now we have new tax regime, we have old tax regime, and both these regimes comes with their own advantages and disadvantages, right? So in this particular session, we will try to decode that. We will try to see which regime may be beneficial for you, what are the deductions, what are the exemptions that you can claim in old tax regime, in new tax regime. So that is something we will try to understand, right? So now, before talking about the actual content of the session, so let me quickly give you the agenda of today's session, right? So this is the sequence that we are going to follow, and these are the topics that we will cover in today's session. So first, we will be talking about the tax exemption from your salary income, right? So now I understand most of the participants are salaried individuals. So for a salaried individual, what are the tax exemptions that you can claim from your salary income? So that is something, a topic to be discussed. So we will try to cover that in detail. Then we will talk about what are the other expenses that are eligible for deduction, right? So this can be your food coupons, if you have taken any professional development allowance. In all these cases, what are the deductions that are allowed? So that is something we will discuss. We will also talk about what are the tax benefits on housing loan. So nowadays it's very common that people are taking housing loan for the purchase of their house property. So if you have housing loan, in that case, what are the tax benefits that you can claim for the repayment that you are doing? So that is something we will discuss. I will talk about ATC as well as the pension products, right? So now when we talk about ATC, the deductions under ATC, so now there is a long list of investments that you can do under ATC. So that is something we will discuss. And again, pension product also, the most important point here is NPS, National Pension Scheme. So that is something we will discuss. We will also go beyond ATC, right? So let us not restrict us only to ATC or the pension product. Let us see what are the other deductions under Chapter 6A, that is under Income Tax Act, which you can explore. Then we will also talk about old and new tax regime, right? So now I understand that again, a lot of you are in dilemma about which regime should I select for this financial year 25-26, right? So now we will try to understand this with the help of tax lab and the rates that we have for financial year 25-26 under both the regimes. And I will also make you understand about which regime can be beneficial with the help of the numbers, right? Because I understand that if we talk in terms of numbers, so that will give us a better understanding. So that's why we will try to take a numerical example to give you a better understanding about which regime may be beneficial. Lastly, we will also talk about what are the factors that you should consider or that you should keep in mind while choosing a particular regime, right? Again, this will be helpful for you so that you can, like on the basis of that, you can select a particular regime that is suitable for you. So all this explanation will take around 40 to 45 minutes for me. So after that, we will also have a 10 to 15 minutes of dedicated Q&A session to take up all your questions. And in the meanwhile, like while I'm explaining anything, if you're having any sort of queries related to the session, please put it in the chat box and I will take up those to answer towards the end. Now, having said that, let us quickly get started with the session. So here the first thing for us to discuss is tax exemption from your salary income. Now, here again, there can be other exemptions or other deductions also which you can claim. But whatever we have covered here are the important exemptions that you can claim from your salary income. So first thing to discuss, the most important here is house rent, right? So now this is nothing but your HRA or house rent allowance. Now, when we talk about house rent allowance, so if an employee is staying in rented premises and if he is receiving HRA as a part of his salary structure, in that case, he can claim HRA exemption. Now, in order to claim this HRA exemption, there are three criteria that we need to consider. And least of these three criteria will be allowed as your HRA exemption. Now, what are those three criteria? First criteria that we need to consider here is 40 or 50% of your basic salary. Now, why did I say two different percentages here? Now, please understand that if you're a person who is residing in metropolitan city, and for the purpose of this HRA calculation, we have four metropolitan city listed. First is Chennai, second is Mumbai, third Kolkata, and fourth being Delhi, Chennai, Mumbai, and Kolkata, right? So these are the four metropolitan city for which you can claim 50% of your basic salary as the first criteria. But if you're a person who is residing in any other cities apart from this four, right? Best example can be Bangalore. So in that case, 40% of your basic salary will become the first criteria. And for the second criteria, you need to consider whatever actual HRA that you're receiving from your employer, right? So this you can easily get from your form 16. So in that clearly it will be mentioned about whatever HRA that you're receiving from your employer. So that will be clearly mentioned. So that will be your second criteria. And for the third criteria, you need to consider excess of rent paid from 10% of your basic salary. That is nothing but in simple words, actual rent paid minus 10% of your basic salary will be the third criteria. So least of these three criteria will be allowed as your HRA exemption. Now again, this HRA exemption is allowed only if you are opting for old tax regime. Under new tax regime, this is not allowed. Now, if anyone of you want to calculate your HRA exemption, you can use our ClearTax calculator. So that is easily available. So if need be, I can also give you the link towards the end in the chat box. So if anyone of you want to see how much is your HRA exempt, you can use that calculator also. Now, this was about HRA. Now talking about LTA, which is nothing but leave travel allowance. Now, if you are taking leave from your employment, right? If you are taking leave from your employment for a few days and if you're traveling, in that case, you can claim this LTA exemption. Now, this LTA exemption, you need to take only domestic travel in order to claim this LTA exemption. Now, that is to say, you need to travel only within the territory of India. So, if you are taking any international trips, for that LTA is not allowed. And also, while traveling, you can accompany with you your spouse, your child, your dependent parents, or siblings also. Now there is a limit for this LTA exemption claim. That is, you are allowed to take two LTA exemption in a block of 4 calendar years. Now please understand that for the purpose of LTA calculation, we follow block system. And each block comes with 4 calendar years. And the current block that is relevant for us is 2022 till 2025. Now in this period of 4 years, you are allowed to take two LTA exemption. But let us say due to any reason, if you couldn't utilize this two LTAs in the period of 4 years, then you need not worry because you can carry forward this unutilized LTA to the first year of the subsequent block. Now for us, first year of the subsequent block is 2026, right? So now if there is any unutilized LTA from between this 4 years, you can carry forward it and utilize it in the first year of the subsequent block. So this is about LTA. Again, LTA exemption is allowed only if you are opting for old tax regime and not under new regime. Then, talking about other common expenses which are eligible for deduction. So here first part is food coupons, Sodexo or Fluxy, right? So now whatever food expenses that you are incurring while you are on your employment. So for that you can claim food coupons, Sodexo or Fluxy deduction. But this is allowed only if you are opting for old tax regime. And here there is a maximum limit set by the Income Tax Act, right? And here the maximum limit is 26,400 per annum. So now each and every individual is allowed to take only food expenses deduction up to 26,400 only and not over and above that. Here the second deduction will be children education allowance, right? So now whatever the education expense that you are incurring for your child, for that you can claim allowance or a deduction here up to 2,400 per annum. Again, this is allowed at very minimal rate. Same goes with children hostel allowance also. So this is allowed at 7,200 per annum. Again, both of these are allowed only if you are opting for old tax regime. Next, talking about professional development allowance, right? So if you are taking any training courses, so if you have taken any training courses which will be helpful for your employment purpose, for that also you can claim reduction under professional development allowance. Now, unlike food coupons or children education allowance or hostel allowance, for professional development allowance, we don't have any maximum limit set by the Income Tax Act. Now, that is to say, this professional development allowance will be allowed on actual basis. That means whatever actual expenditure that you are incurring, so for whole of that amount, you can take it as a deduction, but subject to the fact that this allowance is provided by your employer. Right, so there might be a possibility that your organization has set a specific limit for professional development allowance. So that limit has to be followed upon. So, but this will be allowed on your actual basis. Same goes with books and periodicals also. So whatever expenditure that you are incurring on books and periodicals, which will be helpful for your employment purpose. Again, that is also allowed on actual basis subject to the allowance receipt. Now, both of this, that is last two allowance is also allowed only if you are opting for old tax regime. Now, one important point to be noted here, right? So all these expenses that are eligible for deduction, so there might be a possibility that each and every organization is not allowing all these deductions as their salary structure, or the limits might differ, right? So you need to check with your employer. So this is very important. So you need to check with your employer if these deductions are allowed as per your organization policy. If yes, what are the limits and what are the conditions? So there might be few conditions that your organization has put up to take these reductions. So you need to check all this with your organization, with the payroll or the HR, and then you need to accordingly plan your expenditure. So whatever we have covered here is very generic. So this will differ as per your organization policy. So this was other expenses which are eligible for deduction. Now, talking about housing loan, right? So now, as I already said, nowadays people are purchasing their house property with the help of housing loan. Now, whatever repayment that you are doing, right? So that will be usually divided into two parts. First is the principal repayment component and second one will be interest repayment component. Now, please understand that for both of this repayment, you can claim deduction under the Income Tax Act. Now, whatever we are covering here in this particular slide, so this will be only specific for interest repayment. Again, for principal repayment, so that is separately covered in our next slide. So we will discuss it then. Now, talking about the interest repayment component. Now, for this interest repayment on housing loan, you can claim this under two different sections. First is under section 24B and second is under section 80EE. Now, talking about section 24B, so here if you have taken this housing loan for the self-occupied house property, right? In that case, you can claim interest deduction up to 2 lakh rupees per annum. But kindly note that this deduction will be allowed only from the year of the possession. That means from whichever year you are taking the possession of your house property, only from that year, whatever interest that you are repaying, for that you can claim a deduction. Now the question that may come up to your mind is, what about the interest that I repaid before I got the possession of my house property? So don't worry, this is also allowed as a deduction. But whatever interest that you have repaid before you got the possession of your house property, right? So that will be termed as your pre-construction interest. And this pre-construction interest is allowed as deduction in 5 equal installments starting from the year of the possession. Now, that is to say, from the year of the possession, there can be two types of interest which you can claim. One is the current year interest which you are repaying, and second one will be a proportionate of pre-construction interest. But kindly note that both of this put together, the maximum deduction will be 2 lakh rupees only. Right? So the umbrella limit for housing loan interest will be 2 lakh rupees only if it is a self-occupied house property. And if you are co-owning your property with any of your co-owner, right? So that can be your spouse, your parent, or anyone like that, any one of your co-owner. In that case, this interest deduction will be based on your co-ownership percentage, right? So whatever percentage you are holding or whatever you are repaying as the interest, only for that amount you can claim a deduction in your income tax return. Now this section 24B deduction is allowed only if you are opting for old tax regime. So this was section 24B. Now section 80EE, so this is very specific, right? So now section 24B, each and every person can easily claim it. But for when it comes to section 80EE, right? So there are few conditions that you need to satisfy. So if you're satisfying all those conditions, then you're good to go. You can take the deduction under section 80EE. Now, let us understand what is section 80EE. Then we will also talk about what are the conditions that you need to follow. So here, section 80EE is what was introduced as the affordable housing scheme deduction. Now you can claim interest reduction up to 1.5 lakh rupees per year, that is per financial year. Now, in order to claim this interest reduction of 1.5 lakh rupees, there are few conditions that you need to satisfy. First being, you must be a first-time home buyer. That means on the date of sanction of this loan, you should not own any other house property. Second condition being, you must have taken this housing loan between a time period of 1st April 2019 to 31st March 2022 from a financial institution. Third condition being, the stamp duty value of this house property should be either 45 lakhs or less than that. So if you are satisfying all these conditions, in that case only you are eligible for deduction under section 80EE up to 1.5 lakh rupees. Now, please understand that section 24B as well as 80EE are allowed as deduction only if you are opting for old tax regime. Now, one more important thing to be noted here is, and again, this is a benefit from a perspective of a taxpayer. So if a person is satisfying all the conditions under section 24B and 80EE, in that case, in a particular financial year, he can claim deduction up to 3.5 lakh rupees. That is 2 lakh rupees under 24B and 1.5 lakh rupees under 80EE. But again, this will be applicable only if you are opting for old tax regime. So this was the tax benefits which you can claim from your housing loan. I hope I'm very clear with this slide. Now, coming to ATC, right? So now, as I already said, there is a long list of investment options which you can consider under ATC. Again, we have covered most of the investment option here, but there can be other investment options also which you can explore. Now, before starting with the investment options under ATC, there are two common points that I would like to tell you about ATC. First thing is the umbrella limit. That is all these investments under ATC, which we will discuss for like next 2-3 slides. So all these investments put together, the maximum deduction that you can claim is up to 1.5 lakh rupees. And all these deductions will be allowed only if you are opting for old tax regime. So this two important points you should keep in mind. And also, this again, as I said, this can be claimed only if you are opting for old tax regime and not allowed under new tax regime. Now, having said that, let us discuss in detail what are the investment options that we have. So first we have PF. So here PF is nothing but your provident fund. When we talk about provident fund also, there are 3 categories of PF that we have. First is EPF, which is employee provident fund. So this is nothing but the PF amount that is deducted every month from your salary, and this will be deposited to your PF account, right? Second being VPF, which is voluntary provident fund. Now, please understand that PPF is merely an extension of EPF itself, but EPF is something that is mandated by the statute, and VPF is something that you do voluntarily, right? Now, VPF comes with a minimum lock-in period of 5 consecutive years. Third being PPF, which is public provident fund. So now if a person who is not a salaried individual and still if he wants to go ahead and invest in PF, he can go with PPF. Now in this PPF, he can do this investments either in the name of his own self, his spouse, or his child. Now this PPF comes with minimum lock-in period of 15 consecutive years. So if you are planning to invest in this PPF, you need to be very mindful and careful while doing this investment. Again, as I said, this PF, all these three types of PF will be allowed only under the old tax regime. Second being life insurance premium. So if you have taken a life insurance policy covering yourself, your spouse, or your child, whatever premium that you are paying on this, for that you can claim reduction under section 80C. Third being ELSS, which is nothing but equity linked savings scheme. So this is commonly called as your tax saver mutual funds. So if anyone of you want to invest in mutual fund and simultaneously have a tax benefit out of that, you can consider ELSS. But kindly make sure that this ELSS is coming with a minimum lock-in period of 3 consecutive years to be eligible for the deduction. And also on maturity, right? So once this 3 years gets over, on maturity, so if you're having any sort of capital gain, right? So that is nothing but sale minus the purchase. So if the maturity proceeds, the amount is more than the invested value. So that will result into capital gain, right? So that capital gain will be taxed as a long-term capital gain. So that will be taxed. So there is no tax exemption on the same. Next, coming to housing loan principle, right? So if you remember that in our previous slides, we were talking about interest repayment of housing loan. Now talking about how principal repayment of housing loan. So now whatever principal repayment that you are doing for a housing loan, for that you can claim reduction under 80C. Now this principal repayment, right? So whatever principal repayment that you're doing for this housing loan, you can claim a deduction. Apart from that, the stamp duty value as well as the registration fees. So while purchasing the property, if you have paid any stamp duty or any registration fees, for that also you can claim deduction under 80C. Next, coming to FDs, or rather I would call it as a tax saver FD, right? So if you have opened FD with any bank, post office, or cooperative society, that is coming with a minimum lock-in period of 5 consecutive years. In that case, you can claim a deduction here. But kindly note that whatever income that you receive on this FD, that is nothing but interest on this tax saver FDs. So that will be taxable under income from other sources. For this, you will not get any sort of exemption or deduction. Then talking about tuition fees. So now whatever tuition fees that you are paying for your child, for getting him or her admitted in any school, college, or university, for that you can claim reduction under 80C. So again, I'm repeating, this is only for your child, right? So if you are paying tuition fees for any of your courses, like for yourself, for your spouse, or for your sibling, so that is not allowed here. Only for your child, it is allowed. And that too, the maximum that is for 2 children only for their education in India, right? Only in India that is allowed. Now, whatever amount that you have paid only as tuition fees, that is allowed as reduction here. If you have paid any development fees, any donations, or any other fees for that matter, so that is not allowed. So this is about tuition fees. Now talking about Sukanya Samriddhi scheme. So now this is specifically for those individuals who is having a girl child, right? So this was introduced under Beti Bachao Beti Padhao scheme. So now if you have a girl child who is below 10 years of her age, in that case you can always go ahead and invest in this scheme. So this scheme starts with a minimum investment value of 250 rupees, and this can go up to a maximum of 1.5 lakh. Now, the maturity of the Sukanya Samriddhi scheme will be when your girl child attains 21 years of her age. But partial withdrawal is also allowed when she attains 18 years of her age. But kindly make sure that this partial withdrawal amount you are using either for her higher education purpose or for her marriage purpose. Now, what makes the Sukanya Samriddhi scheme more lucrative option or more attractive option compared to other investment option is this falls under EE category. That is to say, whatever investment that you are doing every year, for that also you can claim reduction under 80C. And also whatever interest and the maturity proceeds that you will have out of the Sukanya Samriddhi scheme, so that is also tax exempt, right? So if you remember in our previous slides when we were talking about other investments, we understood that whatever the income that you have out of this particular investment, so that is taxable, like FDs or ELSs, so those are taxable. But whatever income that you receive from the Sukanya Samriddhi scheme, so that is tax exempt. So if you have a girl child, in that case, I would suggest this is the best option for you. So you can always explore this option. So these were the few investments that were discussed in detail. Apart from this, there can be other investment options also under ATC, which we are not going into much depth for time being. So that can be in the form of National Savings Certificate, ULIPs, NABARD bonds, Post Office Deposit Scheme, or if you are a senior citizen, you can always explore Senior Citizen Savings Scheme also. So now, according to your investment plan, according to your future plan, you can decide which investment you can opt for. So now we are done with ATC part. Now talking about pension products, right? So now when we talk about pension products, so there are two sections, two dedicated sections under the Income Tax Act, which talks about pension. First is not commonly used, which is ATCCC, and second is the most commonly used, which is nothing but ATCCD or National Pension Scheme. Now, ATCCC is nothing but the investments that you do in annuity plan of LIC or any other insurer for that matter, for which you can claim deduction here under ATCCC only if you are opting for old tax regime. Second, talking about ATCCD, which is nothing but National Pension Scheme or New Pension Scheme, whatever you want to call it as. Now, talking about NPS or ATCCD, so there are three sections under ATCCD under which you can claim the deduction. Now, what are those three sections? First is ATCCD, which is nothing but the deduction for employees' contribution to NPS. Now, when an employee has opted for NPS, a specific amount is deducted from his salary and will be deposited to his NPS account. For this, an employee can take deduction under section ATCCD 1 up to 10% of his basic salary. Now, this will be up to 1.5 lakh rupees only, that is 10% of basic salary subject to 1.5 lakh rupees. Again, this is allowed only if you are opting for old tax regime. Next, talking about ATCCD2, which is employer's contribution to NPS. Now, this is the deduction which is allowed under both old and new tax regime. But there are different limits under both the regimes. So now please understand that when an employee has opted for NPS, right, and when he is contributing to his NPS account, a similar matching contribution is also done by your employer. For this, an employee can take deduction in his income tax return, and there are two different rates depending upon the regime that he is selecting. So if he is opting for old tax regime, then here the maximum deduction will be up to 10% of his basic salary. And if he is opting for new tax regime, in that case, this deduction can go up to 14% of your basic salary. Third section under ATCCD is ATCCD 1B, which is additional contribution or voluntary contribution to NPS. Now, if an employee wants to go ahead and do some investments to NPS voluntarily, he can do so. For that, he can claim deduction under section ATCCD 1B up to 50,000 rupees. Now, under ATCCD 1B, this is allowed only if you are opting for old tax regime and not under new regime. So this was about the pension product. Now, one important thing to understand is the overall limits. That is ATC plus pension products. Combining both of this, there are few overall limits that we should keep in mind. First point is ATC, that is all investments under ATC plus ATCCC, that is pension plan, plus ATCCD1, which is employees' contribution to NPS. All these three put together, the maximum deduction that you can claim in a particular financial year is up to 1.5 lakh rupees only if you are opting for old tax regime. In addition to this, you can also claim ATCCD2, employer's contribution to NPS, up to 10 or 14% of your basic salary, depending upon the regime that you are selecting. And in addition to both of this, you can also claim ATCCD1B, additional contribution to NPS, up to 50,000 rupees. But this is available only if you are opting for old tax regime. So this is about the pension products as well as the overall limits. Now, going beyond ATC and seeing what are the other deductions that we can take a utilization of. First is ATD, which is nothing but the medical insurance premium or the medical expenditure. Now, when we talk about ATD, so usually we divide it into two components. First is for medical insurance premium, second is for medical expenditure. Now, when we talk about medical insurance premium, so if you have taken a medical insurance policy covering yourself, your spouse, your dependent child or parent, you can claim deduction under ATD for whatever premium that you are paying. Now we have different limits here based on the age of the insured. Now that insured is a non-senior citizen, in that case, this deduction can go up to 25,000 rupees. And in case insured is a senior citizen, in that case, it can go up to 50,000 rupees. So this was for 80D. Again, apart from that, if you have incurred any preventive health checkup, so for that also you can claim deduction up to 5,000 rupees. But this 5,000 is included in the 25 or the 50,000 limit that we just now spoke. Then talking about the second part, which is the medical expenditure. Now you can claim deduction for medical expenditure also up to 50,000 rupees. But you need to satisfy two conditions. This is mandatory two conditions that you need to satisfy. Only if you are satisfying these two conditions, you can claim a deduction here. First condition being for whom you are incurring this medical expenditure, right? So that person must be a senior citizen. That means he must be of age more than 60 years. And second being, he must not be covered under any medical insurance policy. So if both of these conditions are satisfied, in that case, yes, you can claim reduction under 80D for medical expenditure. Again, both of these parts of 80D can be claimed only if you are opting for old tax. Next up, we have 80DD. So if you are maintaining any differently abled dependent, right? So now this dependent can be either the person's spouse, parent, child, or siblings as well. So in that case, you can claim deduction under 80DD. So here, the deduction limit will be based on the disability percentage. So if that person is suffering from a disability between 40 to 80%, 75,000 flat deduction you can claim. And if that person is suffering from disability of more than 80%, in that case, you can claim deduction up to 1.25 lakh rupees. So this is for 80DD. Again, this is allowed only if you are opting for old tax regime. Same goes with 80U also. Necessarily 80U is the mirror provision of 80DD that we just now discussed. So here everything remains the same, the deduction limit, everything remains the same. The only difference here is 80DD was talking about the dependent disabled person. 80U talks about what if the person himself is a differently abled person, right? In that case, he can claim deduction under 80U. Again, both of these are allowed only if you are opting for old tax regime. Next up, we have 80DDB. So if a person is incurring any medical treatment expenditure for specified diseases, right? So this is not for every disease. So Income Tax Act has mentioned a few diseases which is called as specified diseases. Only if any person is suffering from that specified diseases, he can claim reduction under 80DDB. So now this deduction can be, this medical treatment can be either for the person himself or for his spouse, child, dependent parent or sibling as well. But kindly make sure that you're taking a prescription from the specialized doctor from whom you are getting this treated. And also here the deduction limit will be 40,000 or whatever the actual expenditure that you have incurred, whichever is lower can be taken as a deduction. But if the person is a senior citizen, that means for whom you are incurred this treatment expenditure, if he is a senior citizen, in that case, it can be either 1 lakh rupees or actual expenditure, whichever is lower can be taken as a deduction. Again, 80DDB is allowed only if you are opting for old tax. Now talking about 80E, so if any person is having an educational loan and he is repaying it back, in that case, whatever interest that is repaying on this educational loan, for that he can claim deduction under 80E. But there are again few conditions that you need to satisfy here. First thing is you must have taken this educational loan from a financial institution or any approved charitable institution. And this loan must be for a higher education, right? So now this higher education can be either for your own self, your spouse, your child, or for a child for whom you're a legal guardian. Now, unlike other sections 80E does not mention any specific or the maximum limit in terms of numbers. So that means whatever interest that you are repaying every year for whole of that amount, you can take it as a deduction under 80E. But this will be limited to 8 years tenure only. Next, talking about 80EEB. So if you have purchased an electric vehicle by taking a loan, so now whatever interest that you are repaying on this particular loan, for that you can claim reduction under 80EEB. Here the maximum interest reduction will be up to 1.5 lakh rupees. And you must have taken this particular loan between a time period of 1st April 2019 to 31st March 2023 from a financial institution. Again, both of these are allowed only if you are opting for old tax regime. Then Talking about the last set of sections which are beyond 80C. So in that first step, we have 80G, which is for donations. So if you're donating to some charitable institution or to some institutions, you can claim deduction under 80G. So here, depending upon the nature of the donee, we have different limits here. So it can be 50% or 100% of the donation made can be taken as a deduction. Now, if you are making donation more than 2000 rupees, kindly make sure that you are doing it in a mode other than cash. And also you must take 80G certificate from the donee, right? So this is the most important thing. You should take a donation receipt or a 80G certificate from the donee. Next, talking about 80TTA. So if you are receiving any sort of SB interest, that is saving bank interest, for that you can claim deduction under 80TTA up to 10,000 rupees. But if you are receiving any FD or RD interest, against that you cannot claim any 80TTA deduction. Same goes with 80TTB, but this is specifically for senior citizen. So if a senior citizen is having any sort of interest income in form of SB, FD or RD interest, he can claim a deduction here. And this deduction limit is up to 50,000 rupees. Again, all these deductions are allowed only if you are opting for old tax regime. So we are done with the deductions part here. Now talking about budget 2025, right? So now talking about budget 2025. So now whatever we will be discussing hereafter, so that will be applicable for financial year 25-26 that is going on now, right? The financial year that is going on now. So now what were the highlights of budget 25? That let us discuss that first. So there are no changes under the old tax regime, right? So now whatever deductions, exemption, the tax slab, rates, everything under old tax regime remains the same. Except for the fact that there is a widening of the investment option under 80CCD 1B. So now, as we already discussed, that 80CCD 1B is for additional contribution to NPS, right? So now under this 80CCD 1B purview, we also have NPS Vatsalya scheme being added, right? So if you are investing in NPS Vatsalya scheme also, you can take a deduction up to rupees 50,000 only if you are opting for old tax regime. Next, talking about the most debated part or the most confused part, which is nothing but the rebate. So now please understand this in a very simple manner. So let us understand this in a very simple manner. So here the thing is, for financial year 25-26, if your total income is up to 12 lakh rupees, in that case you will be eligible for rebate up to 60,000 rupees. So you will end up paying zero taxes. But if you are a salaried individual, right, in that case, instead of 12 lakh rupees, so this will be increased to 12 lakh 75,000 rupees because of the 75,000 standard deduction which you can claim under the new regime. But if you are having any special rates of income, now, what are the special rates of income? Like this will not come under your normal slab rates. So the Income Tax Act or the rules has specified few rates, that is few special rates for few of the income. So if you have any special rates of income, like for example, capital gain, lotteries, so all these things will not be eligible for any rebate. But if you have any other sort of income which are coming under the normal slab rates like salary, business income, so against all those things, you can claim a deduction or the rebate here. Last point being here is that is updated ITR. So if you have filed to miss your ITR for previous years, or if you want to make some changes in the ITR that you have already filed, you can go with ITR U or updated ITR. Till like before budget 2025, we had a time limit to file ITR U within 2 years from the end of the relevant assessment year. But now it has been extended to 4 years from the end of the relevant assessment year. But again, there are few points that you need to note about ITR U is you cannot claim any refund there. You cannot increase your deductions or you cannot decrease your income, right? And there will be always additional tax liability along with the normal tax liability that you need to discharge. So talking about TDS and TCS part now, again, there were lots of changes. The whole TDS part has been changed, but being a salaried individual, we need not go into much depth of the TDS provisions as such. So here, whatever we have covered is in a very brief manner, so which are relevant for taxpayer or the participants here. Now, when we talk about TCS, right? So now TCS stands for tax collected at source and TDS stands for tax deducted at source. Now the change that has been made in budget 2025, right? So if you are remitting any amount for educational purpose and if you have financed it through loan, right? In that case, there will be no TCS applicability there. Second being, if you are taking any overseas tour package, So against that, TCS limit has been increased to 10 lakh rupees. Till now it used to be 7 lakh rupees, but now that has been increased to 10 lakh rupees. And also the TDS applicability for senior citizens on interest repayment, right? So that has also been increased from 50,000 rupees to 1 lakh rupees. So now if a senior citizen is having interest income up to 1 lakh rupees, in that case, there will be no TDS applicability. Only in case if it exceeds 1 lakh rupees, there will be a TDS applicability under section 194A. So these are the highlights about budget 2025. Now let us quickly discuss what are the slab that we have for old and new tax regime for financial year 25-26. Now talking about old tax regime, so if your income is up to 2.5 lakh rupees, you do not have to pay any tax, rate will be nil, because 2.5 lakh rupees is the basic exemption limit. For your income between 2.5 to 5 lakh rupees, 5% is the rate. 5 to 10 lakh rupees, 20%. And if your income is exceeding 10 lakh rupees, it will be 30%. And again, this will be followed by cess at the rate of 4%. So this was for old tax regime. Talking about new tax regime, so here the basic exemption limit is 4 lakh rupees. That is to say, if your income is up to 4 lakh rupees and if you're opting for new tax regime, in that case, you need not pay any taxes, rate will be nil. For your income between 4 to 8 lakh rupees, 5% is the rate. 8 to 12 lakh rupees, 10%. 12 to 16 lakh, 15%. 16 to 20 lakh, 20%. 20 to 24 lakh, 25%. And if your income is exceeding 24 lakh rupees, it will be 30%. Again, this will be followed by cess at the rate of 4%. So if you can see here, right, if you can clearly see here, if you can observe carefully the slab and the rates, right? So now under the new tax regime, the slab and the rates are much more beneficial for me, right? First being in the basic exemption limit, second being the 30% tax bracket, right? So if I am opting for old tax regime, so if my income exceeds 10 lakh rupees, I will be straight away falling in 30% tax bracket. But under new tax regime, only if my income is exceeding 24 lakh rupees, I will be falling under 30% tax bracket. Now in new tax regime, although we have concessional slab and the rates, but again the deductions or exemptions are not much available under the new regime. Talking about old tax regime, although we get lots of deductions and exemption, but the slab and the rates are not much beneficial for me. Right? So this is the conclusion of the slab and the rates that we have. Now quickly talking about the example, right? So here we have taken one example to give you a better understanding. So we have here what we have done is we have assumed that a person is having an income of 24 lakh rupees and we have presumed that he is taking few deductions. Now here whatever we have taken are the most common deductions. Again, there can be other deductions or exemptions which you can claim. So if you have significant amount of deductions and exemptions which you can claim under the old tax regime, in that case, again, old tax regime might be beneficial for you. But in our particular example, we have taken only the commonly taken deductions and the exemptions here. Now talking about the old tax regime. So let us first see for old tax regime. So let us assume that my salary income is 24 lakh rupees and here I have taken a standard deduction of 50,000. So now I am left with gross total income of 23 lakh 50,000 under the old tax regime. Now let us take all the possible deductions here. First, I have taken housing loan interest repayment of 2 lakh rupees. ATC 1.5 lakh rupees, ATD that is medical insurance 50,000 rupees I have taken, ATCCD 1B that is additional contribution to NPS 50,000 I have taken. Talking about ATCCD 2. So here although the limit was 10% of basic salary, but here for ease of calculation I have kept it as 50,000 rupees. So now I'm left with total taxable income of 18 lakh 50,000 under the old tax regime. When we talk about the new tax regime here, again my salary income is 24 lakh rupees. Standard deduction I have claimed 75,000 because standard deduction I can claim up to 75,000 under new regime. So now I'm left with gross total income of 23 lakh 25,000 under the new regime. Now talking about the deductions, housing loan interest repayment, ATC, ATD, ATCCD 1B are not allowed under the new regime. But talking about ATCCD2, right? So this is something which was allowed in new regime also, up to 14% of my basic salary. But again, for my ease of calculation, I have taken it as 50,000 rupees. So now I'm left with taxable income under new regime of 22 lakh 75,000. Now, if you go ahead and compute taxes, right? So if you can see here under old tax regime, my tax liability is coming to 3,82,200 rupees. But in the new regime, it is coming only 2,79,500 rupees. So if you can see here, right? So if you can see here, although my taxable income under old regime was lower because of all the deductions, but still my tax liability in the old tax regime is much more higher when I compare it with the new regime. Again, this is happening because of the concessional slab and the rates under the new regime, right? So now in order to conclude this particular question about which regime is beneficial. So now there is no hard and fast rule, or there is no thumb rule by which I can tell, okay, for this person this is beneficial, or for this particular person this is beneficial. There is no such rule like that, or there is no such income level. So this particularly depends on your income sources, your income level, what are the investments that you have done for which we can take deductions, what are the exemptions that we can claim. So all these things needs to be seen there, and only after that we'll be able to guide you about which regime is beneficial. Again, talking about the old tax regime, although we will get lots of deductions and exemptions, but the slab and the rates are not much beneficial. Talking about the new tax regime, although I get very limited deductions or exemption, but the slab and the rates are much more beneficial for me. So it is very highly individual task that we need to do for each and every individual separately to conclude about which particular regime is beneficial for a particular person. Now, coming to the last part, which is what are the factors that you need to consider while choosing the regime. Again, this is not an exhaustive list, and this is very generic in nature, as I said. So depending upon your circumstances, this might change. Now let us quickly talk about what are the few factors that we have, observed and we have jotted down. First thing is the income level, right? So if your income is up to 12 lakh rupees or 12 lakh 75,000 rupees, in that case, obviously new tax regime is beneficial for you because you need not pay any taxes there. But if you have significant amount of deductions and exemptions, right? So if you are claiming HRA, LTA, ATC, ATD, all the exemptions which you are claiming, in that case, old tax regime may be more beneficial for you, right? And if you're a person who is not very much interested in keeping a track of the investments, or if you're not very good at it, in that case, you can go with obviously new tax regime. But if you're very good at tracking, and if you want to keep the investments for a long term purpose, or for a retirement purpose, or for your child's education, marriage, in all those things, obviously you can go with the old tax regime because this will give you more tax saving benefits like PPF, EPF, NPS, and all those things, right? So all these things are there. Talking about the new tax regime, so this will help you to do the tax savings upfront. That is, you're not investing anywhere, and more tax is also not going from your pocket. So all these things are there. But again, as I said, this is highly individual task that we need to do. These are the few guiding factors you can use it while choosing a particular regime. But every year you need to do the calculation depending upon your income, depending upon your investments, and see which particular regime is more beneficial for you. So yeah, so I'm done with my explanation. Hope the session was useful for all of you. So you got few insights about the deductions, exemptions, the regimes. So almost I expect that your doubts has been clarified to some extent. But again, I'll try to take all the queries as much as possible. So yeah, I can see few questions in the chat box. So yeah, and I can see few questions in the uh, Q&A also. So what I request is if all the participants can put their questions in the chat box, right? So that will be more helpful for me, so that all questions are there in one place itself. But don't worry, whatever you have posted in Q&A, so that also I'll take it up. But from here onwards, like from now onwards, please put all your questions in the chat box, right? So now it's okay, 5:48. So till 6, how much ever possible, I'll take all the questions. But if any question is unanswered, so I really can't help it. But I'll try to take almost all the questions from my end, right? Now, first, okay. So first, let me take questions from the chat. So can we opt for VPF option under new tax regime? And see, you can opt. Okay, so there is no, there is no restriction on opting for VPF option. But again, you will not get any deduction for VPF under the new tax regime. Then talking about car lease policy, see, there is no particular guidance about whether it is available under the new tax regime or not. But as it is specifically not anywhere, not mentioned that it is not allowed under the new tax regime. So few organizations will allow it as a deduction, as an exemption. So you need to check with your employer as per your like organization policy what they are doing it, and accordingly you can take a deduction for. Okay. So if I received 10,000 from my friend, is it taxable to me? Okay, so if you have received more than 50,000 rupees from your friend, in that case, yes, it will be taxable. But in your case, if it is up to 10,000 rupees in a financial year, in that case, no, it is not taxable. Okay, 80 CCD2, I have already explained it. So maybe we will also provide you the recording so you can go through it one more time. But if anyone if most of them have not understood 80 CCD2, then I can explain it. Otherwise, I can go ahead with the questions. Okay. After paying 15% as STCG, would the remaining amount is still liable to be taxed as per the income slab? How do we declare this additional income while tax filing? Okay, Rehan, your question is not much clear for me, but I'll just try to answer as per my understanding. So if you have STCG, right? Again, on that now from assessment year 25-26, the STCG rate is not 15%, it will be 20%. So you need to pay 20% tax on whatever short-term capital gain that you had. So that is one thing. And apart from that, if you have any remaining income, right, in form of salary or any interest income, so that will be taxed as per your slab. So that is separate and this is separate. So how do you declare in the income tax return? So the in ITR form, so there are separate heads, right? For salary head, that it is separate. For STCG, it is separate. So under each head, whichever is applicable for you, you need to declare the incomes there, and tax will be automatically calculated. NPS I made online, how to make changes in offline, like where office will be. No, I don't have much clarity on this. Maybe you can just, check out with your employer once, so they will be able to help you better here. Or you can just, check out in online, because I don't have any idea about this, how the changes are made and all those things. Uh, if we have shares granted, if you have shares granted to you outside India but never made any transaction, also if you do trading in India but also bought share not sold this year. Okay, so if you have purchased some shares outside India and if you're just holding it, right, so in that case that needs to be disclosed under the schedule for an asset. So that is very important. Kindly make sure that you're disclosing it. Coming to Indian part, so if you see, trading is nothing but only bought share, not okay. So if you only bought share and not sold it, in that case, again, with respect to Indian shares, you need not disclose anything unless and until you have sold and have some capital gain or capital loss out of it. But with regards to shares that you're holding outside India, so that irrespective of the sale, you need to disclose it. No benefit from house loan in new regime. Yes, so if it's a self-occupied house property, in that case, yes, you will not get any benefit in the new tax regime. Okay, so to all the questions who are asking if my income is this much, then how much is my tax liability and all those things. So that I will not be able to take up in this particular session, because I don't have ready answer or the ready calculation for all the income levels. So what you can perhaps do is you can use the income tax calculator that we have, right? So ClearTax income tax calculator we have. So therein you have to just put in your income and whatever the investments that you have. So it will automatically calculate what is your tax liability under both old and new regime, and it will also guide you about which regime is beneficial for you, right? So you can use that. This is for all the participants and to all the questions who are asking about which regime is beneficial for this particular income or what is my tax liability, right? So to all of them, you can take this. Okay, so what and all sections will be applicable in new tax regime apart from 80 CCD2? Nothing as such, standard deduction from salary which you can claim. So for salaried individual, I would say no other deductions will be available apart from 80 CCD2 and standard deduction. So I will not take the repetitive questions, and also whoever is asking my CTC is this much, which regime is okay. So I'm not answering for those questions now. So you can use the calculator and you can, take the calculation from there. And also a humble request to all the participants, please do not disclose your income in the chat box just like that. Please don't do it. So you can use the income tax calculator, or if IMT Care is providing any portal, or if they are providing any Excel or any calculator, so you can always use that also.
Yeah, hello. I'm audible.
Yeah, Satyam, tell me.
Yeah, so that's what my follow-up to the questions. Like, so what if you got the shares like 2, 3 years back, and we missed declaring those shares, whatever was
Okay.
there in the outside India? Can we declare that in the current year, or
No, see, current year may see whatever current year, so you can disclose, okay. So that there is no harm in that. So from now onwards, you can continue and you can, disclose it, no harm in that. But with regards to previous year return, you will not be able to do anything there, because again, ITRU and all those things needs to be filed. If you want, you can go ahead with that, but again, there will be tax liability and all those stuff that will be there. But from now onwards, you can start putting it, like you can start,
but
disclosing it.
okay, but will there be any penalty because we haven't made any transaction on those shares? It is just like there in this account, but I never knew that we need to file the ITR2, right? For
Yeah.
that.
Yeah,
Yeah.
correct. So yeah, see, in foreign, whatever assets that you're holding, right? So although you have not done any sale, if you're not received any income, in that case also you need to disclose it. That is mandatory. So for like years gone by, you cannot do anything. But again, there is a penalty clause of up to 10 lakh rupees. But again, I think you can justify it by telling that you didn't know and all those things. That should be fine. I don't think income tax department will go to that extent and do it. So that should be fine, but your onwards, make sure that you're disclosing it without fail.
And like it's pretty tedious process, right? We need to put the rate of when it is allotted and
Correct.
all those things Excel sheet.
Correct.
So can I get like any help from your team or somebody? I'll try to reach out maybe.
Yeah. So like once you're, planning to file the return, yeah, we do help you there. But again, for that, you need to, take the plan and all those things. So if
Okay.
you're taking the plan and all those things, in that case, yeah,
So
tax
this
expert
can
will
be
help.
covered right there with the
Yeah,
help.
yeah, yeah. Obviously, we can
Okay.
cover
Yeah,
that.
yeah. That's only I wanted to ask. Thank you.
Yeah.
Okay.
Okay. Okay, so let me, again go back to the questions in the chat box. Electric vehicle, if you buy today, you will not get any deduction. Okay, for books and periodicals, there is, no specific mention about what types of books are allowed here. So ideally, whatever will be helpful for your employment purpose, so that will be helpful. So now for me as a CA, Income Tax Act will be helpful for me, right? So if I purchase those kind of books, that will be helpful. So for that, you can take a deduction. But again, this will be subject to organization policy. Maybe you can check with your employer once. So if they have any specific policy or any specific condition for this, accordingly you can, take the book and, take a deduction also. Shaker, no solar installment benefit in new regime. No, you will not get any such thing. Offer and cost from ClearTax to submit IT return. Yes, you can just, maybe you can just, reach out to your payroll department, so that they will, because I'm not sure whether you'll get any discounts as, IMT Care customers or the employees there. So maybe you can just, get the clarity about this. So I don't have much clarity about because see, the thing is, you can just Google it out, but again, you can just Google it out, the clear tax plans and also there you'll be getting it. But again, it depends whether you can get some discount as a IMT Care employees or customers, right? So that is something you need to check with your payroll or the HR department there. Can we shift from new to old tax regime? Yes, you can do it, provided you don't have any business or professional income, right? In that case, yes, you can do this switch. There is no issue in that. Okay, only I have housing loan, which regime is best. Again, I won't be able to help you or tell you which regime is best. Only on the basis of housing loan, whether you have it or not. So it is very difficult for me. So depending upon your income, depending upon your total deductions, again you can do the calculation and you can get the regime the most beneficial for you. Yes, presentation and recording will be shared with you. Need not worry about that. So I'm receiving 25,000 monthly from my brother for household expenses. Is this taxable? Okay, so if you are receiving any amount from your brother who is, a relative, I presume that this is your own brother, right? So in that case, yes. So this will not be taxable, provided he's a own brother and it is like he's a relative to you. But kindly make sure that you're keeping all the proof ready, the bank statement, like the bank transaction and all ready, in case any notice or anything that you may receive in future. But again, need not worry about this. So this is like not taxable. Do we claim interest on let out property under old regime? Yes, under old regime you can claim. So interest for let out property, there is no maximum limit as such. So as we said, 2 lakh for self-occupied house property. So for let out property, there is no limit as such. So whatever interest that you are repaid, so for whole of that amount, you can take a deduction. So I do not have to submit any proof towards the end of the financial year when I take new regime. Yes, necessarily no, you need not take you need not submit any proof. But in new regime, if you are taking any deductions which are eligible under new regime, in that case, yes, you can go ahead with that. Otherwise, not required. I opted NPS as per new tax regime. Does my employer also provide the same contribution as much as I contributing? Yes, so you need to define the percentage there, right? So I'm not sure how the process really works at IMT Care. So this is the usual method that we follow at ClearTax and all. So you need to specifically opt for employer contribution and all. So this employer contribution is nothing but will be deducted from your salary only, right? So your employer is not contributing in from his pocket. This is nothing but from your salary income only. So this is going towards your employer contribution to NPS. But how will you opt it and all those things, you need to check with your employer. Okay.
Hey, hi everybody. This is Kaushiki from ClearTax. So just to specify, IMT Care customers like the corporates under IMT Care and also the employees of IMT Care can avail up to 71% of discount on ClearTax services. Although the ITR filing is not started yet from the government side, so the plans are not live yet. But as soon as it starts, you can come to the IMT Care microsite that we have shared in the chat box. You can explore the page and you can avail these discounts and get up to 71% off on all the plans that we have on ClearTax.
Thank you, Goshki. Thank you, Aishwarya, for this lovely session. I hope people have gained, so much insights on this very, very important topic, right? And thank you everyone for joining. Thank you for such good questions, and be a sport and be interactive in this session. Thank you so much, everyone, and hope you have got good insights. And if you need any help, as Kaushiki told you, you can go to that link and get those sessions, right? Get the help. So yeah, thank you so much and have a lovely weekend, all of you. Thank you so much. Stay happy, stay safe. Bye-bye.
Thank you. Thank you everyone for joining. Thank you.
Yeah.